The story of Burkina Faso, under the leadership of Captain Ibrahim Traoré, has been one of resilience, defiance, and bold strategic choices that continue to reshape how Africa positions itself in the global arena. Today, the world is watching with keen attention as news spreads that an Omani billionaire has struck a monumental gold deal with Burkina Faso, a move that has not only stunned the West, but has also raised new debates about Africa's sovereignty, its natural resources, and the redefinition of global power alliances. To fully understand the magnitude of this deal, one must step back and look carefully at the context, the players involved, and the far-reaching consequences that this agreement might hold for Africa, the Middle East, and beyond. Burkina Faso, a landlocked country in West Africa, has long been rich in resources, particularly gold. Gold mining represents a massive portion of the country's economy and its exports. Yet for decades, despite producing large quantities of gold, the nation has struggled with poverty, underdevelopment, and dependency on Western aid and foreign corporations. Multinational mining firms from Europe, North America, and other regions historically controlled much of the sector, often extracting immense profits while leaving local communities in hardship and governments with little negotiating power. Ibrahim Traoré, since taking power, has repeatedly emphasized that this system had to change, that Burkina Faso must finally claim its rightful share of its own wealth and ensure that deals directly benefit its people rather than foreign entities. It is within this backdrop that the recent deal with the Omani billionaire becomes even more significant. Oman, a Gulf nation strategically located on the Arabian Peninsula, has a long history of trade, investment, and quiet diplomacy in Africa. Unlike some Western powers that are often associated with aggressive conditions tied to loans, aid, or resource exploitation, Oman and other Gulf states have positioned themselves as alternative partners, offering capital, expertise, and infrastructure development without the same strings attached. The Omani billionaire behind this gold deal has not only provided financial muscle, but has also signaled a deep interest in strengthening economic ties with Burkina Faso and, by extension, the broader Sahel region. This gold deal is not just about money, it represents a geopolitical shift. By aligning with partners in the Middle East, Traoré is sending a message that Burkina Faso will no longer bow to the dictates of Western corporations or institutions such as the IMF and World Bank. Instead, the country is choosing to diversify its partnerships and create leverage through new alliances. For the Omani investor, the deal is not only financially lucrative, but also strategically valuable, as it gives Oman a stronger foothold in Africa's booming resource markets at a time when global demand for gold is surging due to financial instability, inflation fears, and the search for alternative assets beyond the U.S. dollar. The deal reportedly includes multi-billion-dollar investments into modernizing Burkina Faso's gold mining sector. This involves not only extracting gold but also building refining facilities, training local workers, and establishing mechanisms to ensure that a larger share of revenues remain within the country. This shift toward value addition is one of the most crucial elements of the agreement. For decades, African nations exported raw resources only to import finished goods at much higher costs. By keeping part of the refining and processing industry within Burkina Faso, the country stands to capture greater value, create jobs, and strengthen its economic independence. Critics in the West have already expressed concern about the deal, suggesting that Traoré is turning away from traditional partners and exposing Burkina Faso to new risks. Some have accused Oman of trying to expand its influence in Africa in ways that could undermine Western interests. Yet, from the perspective of many Africans, this is exactly the type of bold move that is needed to break free from cycles of dependency. Traoré has consistently argued that African nations must act with courage and refuse to remain passive in the global economy. Instead, they must negotiate hard, seek out partners who respect their sovereignty, and leverage their immense natural wealth for the benefit of their people. The symbolism of this deal cannot be overstated. Gold has always been at the heart of Africa's story, from ancient empires like Mali and Songhai to modern-day mining economies. For centuries, outsiders have extracted gold while local populations were left behind. The Omani deal marks a turning point in which an African leader stands firm, demanding terms that prioritize his nation's development. For ordinary Burkinabe citizens, this news has generated a mixture of pride, hope, and cautious optimism. Many see it as proof that their country can chart its own path and that Traore is willing to confront powerful interests in order to secure a better future. Beyond Burkina Faso, this deal resonates across Africa. Leaders in neighboring countries are watching closely, inspired by the possibility of alternative partnerships that bypass Western institutions. Countries like Mali, Niger, and Guinea, which share similar struggles with resource management and foreign interference, are likely to see this as a blueprint for future negotiations. Even beyond West Africa, the symbolism extends to the wider African continent, where the call for economic liberation and control over resources is gaining momentum. Globally, the timing of this deal is also significant. Gold prices are near record highs as investors around the world seek safety amid uncertainty in the global financial system. Concerns about inflation, banking instability, and the long-term dominance of the U.S. dollar are pushing nations and wealthy individuals alike to accumulate gold reserves. For Burkina Faso, this means that its gold is more valuable than ever, not only as a commodity, but also as a geopolitical asset. By securing better deals now, the country positions itself to reap greater benefits in the years ahead. The Omani Billionaire, whose name has not been disclosed widely in the early reports, is believed to have vast holdings across energy, infrastructure, and commodities. His entry into the Burkinabe gold sector sends a clear signal that Gulf investors see Africa not just as a source of raw materials, but as a long-term partner in economic growth. This aligns with Oman's broader strategy of diversification, seeking to expand its economic footprint beyond oil and gas, while also ensuring access to critical resources in a changing global order. However, such a monumental deal is not without its challenges. Questions remain about governance, transparency, and how revenues will be managed. Burkina Faso must ensure that the funds generated from this partnership do not simply enrich a small elite or disappear into corruption. Traore has made anti-corruption one of his key messages, vowing that under his leadership, resource wealth will serve the people. The success or failure of this gold deal will depend heavily on the ability of his government to uphold these promises and implement systems that guarantee accountability. Another challenge lies in security. Burkina Faso, like much of the Sahel region, faces ongoing threats from extremist groups and insurgencies. The gold sector has often been targeted by armed groups seeking to fund their operations through illicit mining or smuggling. To fully realize the benefits of this deal, Traore's government must also strengthen security measures to protect mining sites, workers, and infrastructure. This will require not only military efforts, but also community engagement to ensure that local populations see tangible benefits and thus support government initiatives. Internationally, the deal is already shaking the balance of power. Western corporations that previously dominated Burkina Faso's mining sector may find themselves pushed aside or forced to renegotiate under less favorable terms. This could lead to political friction as Western governments seek to protect the interests of their companies. Yet Traore has shown little fear of confrontation. In speech after speech, he has emphasized that Burkina Faso will no longer be intimidated, that it has the right to choose its partners, and that the era of exploitation is coming to an end. The implications for Africa's financial future are equally profound. If more African nations begin to secure similar deals with Middle Eastern, Asian, or even intra-African investors, the stranglehold of Western financial institutions may weaken. This would accelerate a broader trend of de-dollarization, where countries move away from reliance on the U.S. dollar and Western-dominated financial systems. Gold, in this context, becomes not only a commodity, but also a tool of financial sovereignty, allowing countries like Burkina Faso to assert greater independence in global trade. For Oman, the deal is also a bold move. It places the Gulf nation at the center of a growing reconfiguration of global alliances. By strengthening ties with African nations, Oman diversifies its diplomatic and economic relations while positioning itself as a bridge between Africa, the Middle East, and Asia. This is consistent with Oman's historical role as a maritime trading power, one that connected the Indian Ocean world for centuries. The symbolism of Oman returning to Africa in such a powerful way resonates deeply with history while pointing toward the future. As news of the deal spreads, reactions from ordinary Africans reflect a deep hunger for change. Many see Ibrahim Traoré as a symbol of defiance and hope, a young leader willing to stand up to entrenched powers and chart a new path. The Omani Billionaire is perceived less as a dominating force and more as a partner, precisely because the deal was presented as mutually beneficial rather than exploitative. This perception is crucial, as it helps build public support and reduces the risk of resentment that often accompanies foreign investments in Africa. Looking ahead, the success of this partnership will depend on implementation. Building, refining. Facilities, creating jobs, ensuring fair distribution of wealth, and protecting national sovereignty are monumental tasks. Yet, if managed properly, this deal could mark a turning point not only for Burkina Faso, but for Africa as a whole. It could inspire a wave of similar agreements, leading to an era in which African nations finally capture the full value of their resources, lifting millions out of poverty and asserting their rightful place in the global economy. This deal also forces the world to confront deeper questions about fairness, sovereignty, and the future of globalization. If Africa can rise through partnerships that respect its autonomy, then the old systems of exploitation will face unprecedented challenges. For the West, this is a wake-up call that the days of unilateral dominance are fading, replaced by a multipolar world in which Africa is no longer a pawn, but a player. For Africa, it is an opportunity to seize the moment to demand fair terms and to rewrite its story as one of empowerment rather than victimhood. The gold deal between an Omani billionaire and Burkina Faso's Ibrahim Traoré is more than a business transaction. It is a declaration, a statement to the world that Africa is no longer waiting for permission to control its destiny. It is a reminder that partnerships can be built on respect and mutual benefit rather than exploitation. And it is a challenge to every leader, African or otherwise, to consider what true sovereignty looks like in the 21st century. As Burkina Faso moves forward with this bold step, the world will be watching, and history may very well record this as the moment when Africa's long march toward economic liberation gained unstoppable momentum.